Well, I think, again, the consensus for non-farm payrolls is 200,000. That's less than half what it was all of last year on a monthly basis. And it's in 261 was the lowest print last month this year. So there's still a ways to go on the non-farm payrolls and employment. The ADP number, which is not as reliable an indicator as non-farm payrolls, came in at 127,000. That came out just a couple days ago, and the consensus was 200 there. So that's not a perfect read. That's why this print today is really very important. And if it goes above 200, you're going to see the market really pull in, and in kind of the short term. But if it comes kind of comfortably below, closer to that ADP number, then I do think that the market's going to probably have kind of not a Wednesday, but it'll have a little bit of a positive move.
Very good morning to you. Are there some really nasty old things out there that remind you and I and the rest of the gang of 2008? I'm talking about this FT story last week about collateralized fund obligations, where products look like they're being sold at very, very interesting debt levels and multiples and ratings. And now I read that Blackstone has limited withdrawals of its $125 billion real estate investment fund following a surge in redemption requests. Again, I'm reading that copy off the FT today. Blackstone shares falling 8% yesterday. There's some nasties out there that we're just not appreciating.
Well, I think on the BREIT kind of mention on the redemptions, I mean, that's sort of what you would expect. And that product was designed to kind of slow down redemption. So it's not a rush to the exit. It has to be an orderly exit. But I don't think we're looking at a 2008 at all. I mean, there are some growth, kind of factors, the opening up of China. You have, the US dollars, weakening, so that, you would expect that would have a stimulative effect. Gas and oil, as you mentioned, has been, coming in the United States. And you also have, because of these inflation numbers and the way things work, the retirees in America are going to get a cost of living increase adjustment. It's pretty considerable, and that affects a lot of consumers, so they'll have a little bit more cash in their pockets. So I think this is not a 2008. The banks are absolutely fine. The capital levels are, is at historically high levels. So I don't see a nasty kind of prognosis here. And I think, look, the crypto FTX kind of dynamic, this has just showed you how limited it was. And even though I think it got up as high as 16% of Americans own some crypto, it was really held in fewer hands. So it really doesn't rest of the market.
So, Neal, what I'm basically asking you is, and you mentioned about banks being secure, and I get that, but I'm talking about the other side of the ledger, the non-bank financial lending, the private sector, which is loath to revalue as quickly as a public sector market does, and that's why it's the public sector, so it hasn't the same level of scrutiny. You don't think there are as many nasties in the private sector with the revaluation of assets there, with the gated money now becoming a bit of a problem for some investors as well? Nothing there at all that's going to worry the public markets?
Well, you're painting me into an absolute position, which I of course can't take. But, look, that's where you would have issues. It'd be in the as you mentioned, it'd be in the non-bank area, the non-bank lending area. But I do think that it's not something that we're particularly concerned about in specific areas that I can identify for you. We just think that the Fed's doing the right thing. They're acting quickly, and you're actually seeing a high yield trading up a bit because people are saying, look, the Fed's going to tighten here, but it's not going to go to the point where we're tipping over folks into delinquencies. The one area we're seeing is in subprime. That the delinquencies have ratcheted up quite a bit, as I mentioned earlier. That's the one area, where it may affect the securitization market, or it has affected the securitization market in the consumer area, especially weaker consumers. And so that's where you're seeing the stress.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.